Good afternoon, everybody, and welcome to this week's episode of Signal with Snorlax, brought to you by Because of Bitcoin, and of course, me, Snorlax. You guys also know me as Tommy. Last week, we talked about stock market dreams and nightmares. Well, I wouldn't say that we're necessarily having a nightmare at this point. It is definitely a bad dream. It's Thursday. You should know the drill at this point. The market tends to sell off on Thursdays when I do these videos. Regardless, I'm going to have a great show for you guys today. We're going to talk about whether or not this move that we're seeing throughout markets is the beginning of a nightmare or if it's just kind of a bad dream, obviously within, I guess, a much bigger good dream. I don't know. I'm not gonna dwell on that analogy too much, but today I want to talk about tech earnings and bond volatility, because I think these things are, especially maybe not necessarily earnings for tech, but kind of what the Mag 7 does from here, what these large cap assets do from here, are going to tell us a lot about what we're going to see over the course of probably Q3. Now, last week when the video was posted, I actually recorded it like 2 weeks ago, so hopefully it was still high signal for you guys. God, what was I going to say? I totally just blanked. But yeah, no, I talked about the possibility for a right tail in markets. If we could force a breakout above the highs on something like the S&P. Obviously, the Dow was super strong from seeing this just relentless bid on defensives. And if we saw a kind of capital reconcentrate into defensives and into the Mag 7, the possibility for a melt up was definitely there. Now, I don't want to write that off yet, but I think what we're seeing out of tech so far has really not been super encouraging. Honestly, the same should be said for the Kospi and the Nikkei. Quite frankly, we'll see kind of how it all pans out. Again, I don't want to be too reactionary to a Thursday move down. The S&P, after all, is still respecting market structure and the trend is higher. So I don't think you want to be like shorting into the hole on a day like today. But I do want to talk about the risks that I think are present in the market right now. And I think they're pretty significant. Not just a rising VIX, but I guess we can kind of talk about like, why are we seeing such red days out of some of these names, out of beta? I mean, Tesla is just getting slammed today, absolutely slammed. Maybe a tiny bounce coming, but in general, like, well, okay, we'll talk about Tesla. I don't want to get off track. Why is the market nuking? Really because of yields, guys. The 10-year is showing a tremendous amount of strength. Why? Because oil has, I mean, that's an unbelievable bounce. You know, I was kind of talking to a friend about this over the weekend, I think it was, like, oh, are we going to see maybe something like this on oil before we finally get an ascent? Hey, we're just going for it. We're just going for it. I don't really know where this is going to stop. Might just rip straight to new highs. I think the Astro is pretty favorable for continued escalation in the Middle East. But that is another question. The important thing is that we're seeing oil rise. And as oil is rising, this is putting more pressure on both short-term yields and long-term yields. We can also visualize this through TLT, the 30-year inversed, obviously. Our treasury bonds look horrible. Now, I have talked with you guys for many, many months about how I do feel at some point we're going to have a huge blowout in the treasury market and the bond market, and then obviously yields kind of exploding. Is this the moment? I don't know if this is the moment, but I am thinking that if we're breaking this high, 4.8 on the US 10-year, which is really not that far away at this point, we probably, it could be here. Definitely could be here. And I think at that point, that's going to cause so many problems for the market. This dispersion trade, so much has been made about the fact that single stock volatility is trading so much differently than index volatility in the VIX. What is going to kind of like break this dichotomy, we'll call it, or this duality between those two metrics? Because single stock vol just keeps elevating. Why are they different? It's basically communicating to us that Like we're seeing these 10, 15% moves out of members of the S&P on a fairly regular basis, but the index can't sell off because that capital is just kind of like sloshing back and forth between these large cap names. And that has kept index volatility very muted, right? Like one day you have Tesla down 15%. The other day, you have something like Goldman up like 8 or 9%. That was like last week. I think it was either Monday or maybe the week before that. The important thing is that like we've just seen this massive capital rotation because short-term correlations have been so low. There's been so much liquidity in the market. Now, what could break this, like I said, dichotomy is bond volatility, because the one thing you'll notice about these short-term correlations is that they're trading very, very, very closely to bond volatility. See that? They're very similar. So the fact that we're seeing such volatility now out of 10-year does tell us, like, all right, are we going to see moves start to elevate, which will elevate core 1 month, which will in turn further elevate our single stock vol. And when the rotation trade kind of ends, then we will see index volatility start to elevate. So is that now? Again, I guess I think we'll have to see. I do think at some point the reckoning for this market, and if you take away anything from this video, take it away from like the next 15 to 30 seconds that I'm about to say. I think the biggest risk to the market right now is not growth. It's not a growth scare. I mean, I know people are looking for a recession to happen because of anecdotes and all this other good stuff. That's usually how like a cycle will end. I actually think the biggest threat to the market is a sudden and fast rise in yields that puts pressure on these AI companies that have just taken out significant amounts of debt. Private credit companies, I think you kind of have to include in that as well. Software would be put under pressure. But really, like members of the Mag 7 and hyperscalers would be extremely vulnerable to an environment where you have yields very suddenly and very aggressively make a move to the upside. So, yeah, I mean that's really, in my opinion, the biggest risk that we're seeing. We're seeing how damaging it could be today, but nothing's broken yet. I want to be clear about that. Nothing has broken yet, but I do think this reckoning is kind of inevitable for this market. We'll see kind of eventually when that happens. But why are we moving the way that we are? It's all related to bond volatility and yields. If yields keep climbing, things are going to break, and treasuries will break. And maybe that's because oil just keeps ripping. I don't know. Maybe it's because of something else entirely. But this is kind of where I think the importance will shift back to the Mag 7 and tech. Because again, the right tail does exist if we see a reconcentration of capital into defensives and the Mag 7 specifically. However, I don't love the look of QQQ here. Structurally, I think it looks significantly worse than the S&P. And can the Mag 7 kind of save the market? Well, I don't think anybody should be missing earnings, honestly, in big tech companies. I know Tesla kind of did yesterday. Google beat, and they're selling off. So I just think the market's, God, that chart is just hilarious. I just think the market's kind of pricing in perfection at this point from the standpoint of tech earnings. And it's going to be hard. Like the context right now seems kind of difficult for the market to move up on that. If that's going to be the catalyst, it needs to be something else. Like it probably needs to be a taco that smashes oil into the center of the earth, but this does not look bearish, man. It's like in theory, you could maybe get a rejection now that we're retesting some of this supply, but oil looks really good, guys. It does. So you're going to see more pressure, I think, put on yields to go higher. That will be bad for Mag 7, and it will be bad for the dispersion trade. And earnings for the Mag 7, I imagine, will probably continue to be positive. It's just going to be a matter of, all right, does the context that that's operating off of change over the course of the quarter? Because my God, you look at some of these high time frame structures, they look bad. They look bad. They look like they could be on the verge of a blowout, kind of the one that I was discussing a lot in Q1 and obviously early Q2. I mean, this looks like double top distribution at a macro swing high. I don't know where this is going to bottom, but not here. Not here. Google, I thought looked like one of the better looking names in the Mag 7. So the fact that it sold off on earnings, I did think was contextually pretty significant. I'm not really thinking that NVIDIA is going to make a new high, but it is strong today, right? It's certainly strong today in the face of this weakness. So if we do get a bounce, if we do rip to new highs in equities, I think you kind of have to be bullish on NVIDIA. But with that said, I'm thinking this is going to fade from here. I'm thinking this is going to fade from here. If you want my opinion on NVIDIA in more detail, I have posted about it a lot in the Discord. So join the Discord, guys. Use code Hormuz for 75% off your first month. I don't know if we're still running that promotion. I think we are. I can't promise that we're going to be running it for much longer. So get in while you can. Meta. Meta is so funny because a week or two ago, I was looking at this and I was thinking to myself, like, this is a good catalyst. If we can break out above these highs, then I think the odds that we go to a new all-time high, 888, final target, would be pretty good. But I also felt like, all right, well, if we see some like lower time frame distribution start to occur in here and then bleed back down, Meta tends to lead not just the Mag 7, but kind of indices. That would kind of be a signal to me like, all right, this pump was fake. And I think you had a really nice looking bullish setup and it shouldn't have sold off like this. So I'm really not super optimistic about Meta. And if we're looking at names that are going to be adversely affected by rising yields, Meta is one of the most obvious. It's a hyperscaler, right? And then Microsoft is another one. Microsoft is another one where yields rise is going to be very adversely affected by that. And I think Microsoft is, again, still kind of like communicating the timing of the market. We will I feel very strongly we will have a blowout at some point. We're not early cycle. We are not. I don't think you just continue to slow grind higher for the next 4 or 5 years, like it's 1924 or something like that. No, I think we are headed for a blowout. We don't know when that's going to be. And this chart kind of like perfectly encapsulates like visualizing that idea. We're sitting at support. We don't think support's going to hold. I don't, at least. I've never seen a chart bottom like this. Not with a structure that looks like this at the support. Whenever this gives out, could be next week. It could be in like December. Who the hell knows? I kind of think it's going to be this quarter, though, roughly. When this gives out, you're going to have your blowout probably at the same time. And I think that's true for equities. I think that's true for Bitcoin. And I will talk about Bitcoin today, but I think this is really like a perfect visualization of like this market has been sitting on a knife's edge for a long time. And although we've had some amazing speculative moves out of it, things like SMH and the Kospi, you've still like the issues haven't fully gone away. They never have. So if we get a blowout on yields, like this is going to rip through support, and it's probably going to traverse the entirety of this region based on the amount of time that it's been cooking above this support. Just my opinion. I think Oracle is painting the case for a sell-off in the near term, probably more than most names. This chart probably will be the most adversely affected if yields explode from here, given it's just extremely high debt issuance. Looks so bad. It really does look so bad, man. Maybe you get a bounce, right? Like more just kind of dwelling on a cliff's edge, but I don't know why you would. I don't know why you would at this point. It looks absolutely awful. Don't know where this would bottom. This just looks like a massive high time frame head and shoulders. I cannot be bullish on this chart. I saw people posting like, oh yeah, it's a bull div. Are you serious right now? You're telling me it's been so easy to make money in stocks over the last 6 months that you're trying to post bull div propaganda on this? Dear Lord, man. Dear Lord. Best case, you get something like that. I don't even know if you get it. I don't even know if you get it. I kind of think this is just going to roll from here. But I don't have a position in Oracle right now. Maybe I should. I think the Nikkei is going to tell us a lot about where we're headed. I mean, Japan's just been absolutely pumping the market full of liquidity. Again, it's reflected in the similarities between the Nikkei, and SMH, semiconductor charts, memory charts, and obviously the Kospi. So if this keeps rolling, I would trust it. I would trust that there's some issues going on within Japanese markets or bonds. And we can see that reflected through USD JPY, which I'll keep saying, like, this is headed for 200. So many people talking about the reverse carry trade unwind. And it's like, you are way overestimating the BOJ's ability to get this thing back down. It's not going back in the bottle. It's going to blow out to the upside. To me, whenever this move does finally happen, like, again, that will be when we see this turmoil, like, and risk spread throughout the market. It doesn't have to be now, but feel strongly it's coming this year. And again, I tend to think that it's coming this quarter, but I don't want to speculate too much on timing. What I do feel strongly about is that it is coming. The USD JPY is going to blow out. The yen carry trade bros are going to be right on the yen carry trade blowing up the market and completely wrong on the direction that it's going to occur within the dollar yen pair, which is super funny to me because that's just kind of markets for you. You can be totally wrong on why something happens, but print if you get kind of like the big move that you were talking about for the wrong reasons. It's just very important to have and do enough research on the instrument that you're choosing to express a bet. This is a perfect example, in my opinion. This is just, again, basically your U.S. Treasuries chart, your U.S. 30-year chart. We're talking about a very large move higher in yields, a very large move lower in Treasuries. I do not think that markets will be able to survive such a move with just like a blip correction. I don't. No, that could cause a debt crisis, actually, which is a little dark, but we won't get into that today. And it goes without saying, again, like, these companies with just like massive capex and debt are going to hate that. They're really going to hate that. All right, lastly, we'll talk about Bitcoin and then I'll wrap up. Bitcoin is interesting for a lot of different reasons. I mean, for one, Bitcoin usually has a green month in July in midterm years. So, gun to my head, I am expecting Bitcoin to close this month green. I don't have a great read on when this could sell. I do not think the macro bottom is in. I've been very, very clear for a very long time that I think we're just replicating the 2008 structure on the S&P and the Dow. Now, what I see when I look at Bitcoin is we've got our swing low here. We deviated above that swing low. And now you saw that reconsolidation before your capitulation down, your GFC. With Bitcoin, we've got our swing low. We deviated the swing low. We are reconsolidating. I think we are in July, August, September of 2008 with Bitcoin. They look very similar. They really do. We'll see if it gives the same move. I don't know if it will or not, but I don't think the macro bottom is in for Bitcoin. Not even close. Time-wise, we're probably pretty close. But I think, people sticking out their chest here and just like, you're an idiot not for buying Bitcoin here. You are, I really think you're going to get dunked on by the end of the year, and you're going to get dunked on in pretty spectacular fashion. I don't have a position with Bitcoin though, because I think it's a little bit tougher for me to time. I could see this like chewing up theta on options and just chopping perps out for like weeks. It could roll from here, like it could roll very soon. But I could also see the scenario where it chops out everybody before it finally moves down, and you just have kind of like equities selling off with Bitcoin relative strength for a few weeks. But I'm less confident on making that prediction. we'll see. Gun to my head though, Bitcoin macro bottom not in. We look like we're in the summer or early fall of 2008 of the S&P and the Dow Jones structure. I think they're gonna end the same way. I really do. And I don't think the MicroStrategy will be spared. I think Coinbase looks awful. What more really needs to be said about crypto at this point, in my opinion? But yeah, guys, those are my thoughts. The S&P hasn't broken market structure yet, but I definitely think we're seeing some signs within the peripheries that are looking pretty bad. Like if the 10-year rips from here, you're going to see the market break. If yields rip from here, if treasuries nuke from here, you're going to see the market break. Doesn't matter what causes it, just if it happens. It's not even like, I don't even think it's like it needs a fundamental reason at this point. Like these are just all of these trades that are the most crowded have kind of been converging on an outcome like this. So mechanically speaking, you might force the market to recorrelate in a way that it's going to hate, and everything would nuke if that happens. But it is earnings season. We could still reconcentrate into Mag 7 names and defensives. I don't want to be too gung-ho about that, but it is looking more and more like the nightmare that we discussed last week seemingly is going to be more likely in the near term than I guess, like the dream. So I would just pay attention to that. I hope you guys enjoyed this week's episode of Signal with Snorlax, right around 20 minutes. So I think I timed this one pretty good, but we'll be back for another episode, obviously next week. Maybe it'll be a dream. Maybe it'll be a nightmare. It will be on Thursday. So probably, I guess we'll see. But very, very important period for markets right now. I think that much needs to be emphasized at the very end of this. They need to get yields back down. They need to get oil back down. If they can do these things, then the market could theoretically rip from here. And if they can't do those things, if they continue to blow out, we're in for a very nasty quarter, honestly, across the board. But that's it for me. Hope you guys have a great rest of your day, a great rest of your week, and yeah, stay safe.